Bring in Brian Nagel. He's senior equity research analyst in retail hardlines and broadlines at Oppenheimer. Brian, it's good to see you again. You've got a buy rating still, a 150 price target on the stock. It's below 100 now. When do you throw in the towel?
Well, I'm not going to throw in the towel. I think Nike's given each day it goes down, it gives us a better buying opportunity, for investors looking, I'd say over the intermediate to longer term. In my view, and I've been talking with our clients about this a lot lately, I get it. There's a lot of concerns out there right now. There's, like you mentioned in your opening, Kelly, there's concerns over consumer demand in China. There's still concerns about consumer demand here in the United States, competition, inventory clearance. But look, I think we've seen this from Nike. Nike is actually performing very well through all of these concerns. Now, it's hard to say when the stock breaks out again. But look, I think the underlying fundamentals of Nike are in place, and I think it's just a matter of time before the stock once again begins to reflect those fundamentals.
Sarat, a thought here?
Question. I understand what you're saying. Look, and in my experience, buying a global brand when it's on discount is the time to do it. I mean, historically, that's how you've made money. The question is, given valuation now, where you see the 10-year, it still trades at 30 times earnings going forward. What is the base case of the earnings reset? Because you're looking at bear case earnings right now. So obviously your PE is much higher when the earnings are down so low. So when you look at it out and you spread it, what do you think is a fair multiple for a stock like a Nike that's a global brand that when it comes back, it'll be hot and everybody wants to get it? And now none of the momentum guys, actually even want to invest in it.
No, look, I think it's a great question. It's something we wrestle with. So to answer your question, I think Nike steady state is a 30 to 35 multiple type stock. Okay, we've seen it trade higher than that, particularly when rates are really low. And right now, at least the math I'm using, we're seeing Nike trade substantially below that range. But look, I think this is a 30 to 35 multiple stock. And the point you bring up is a good one. If we look at the earnings right now, those are still at least somewhat cyclically depressed. We look over the next few years, do we get to more normalized earnings? So my view in the stock, and that's how I get to my $150 price target, is that multiple back within that range, and frankly, I'm using the low end of that range, and then a more normalized earnings trajectory for the company.
Let's talk a little bit about China. What do you see happening there, and how important is it to Nike's future? I assume the answer is pretty doggone important. And number two, competition, to the extent that there is more of it, and they may not own the market quite the same way that they did 5 years ago.
Yeah, look, we've got to be honest. I don't know if anyone has a great read into what is happening in China. Okay, if you look at Nike's most recent commentary, okay, so Nike reported its fiscal fourth quarter results in later June. Okay, and the CFO and CEO they were very much talking up what seemed to be a nice rebound in the Chinese market. Okay, at the same time, they're talking about the continued strength in the Nike brand within China. Okay, and this was only 2 months ago. Okay, so look, I think Nike's a longstanding player in China. We've heard the comments from Nike itself. I think Nike's doing well there. Now, I get it. We have this almost every day on CNBC. We're talking about some risk to the Chinese economy, and I see why that would spook investors. But I think Nike is in that market, performing well, and frankly taking market share, as well as continuing to fend off competition from many local players that may be trying to emerge.
So, Brian, if this is a great buying opportunity, and of course it always would be, I just think of a couple things. Disney, for instance, during COVID, you might have thought, oh my goodness, I can pick up this company for $85 a share. You fast forward to today, it's back at 85. So, you just wonder about, and maybe demand for Nike's products is intact longer term, but, is it the same level that we might have expected, in the past? Just, is this really kind of the once in a lifetime opportunity that it seems?
No, I think it is. And look, I say this somewhat jokingly, but I'm actually really serious when I talk to our clients. I mean, we're all dressing much more casually now. This was a trend that was in place before the pandemic. I think it accelerated during the pandemic. And now I think as we're post-pandemic, I'm seeing the trend stick. Because I'm visiting clients, we're just not dressing up anymore. Look, that's a big benefit. That trend is, and we're seeing this in the United States. I'm starting to see when I travel overseas as well. This casualization trend is a big positive for Nike's, it's a positive for Lululemon, it's a positive for other players in the space. And I think that really speaks to this market share opportunity. So to answer your question, Kelly, I think the underlying demand right now for Nike, the demand potential is actually better than it's been in the last several years, because I think we're buying more of this type of product for everyday wear.